Unemployment tomorrow, the estimate 3.9%. Payroll's just around the corner. Jobless claims behind us. Mike McKee is with us to break it down. Morning, Mike.
Morning, John. Jobless claims not signaling a problem for the economy at this point, as both initial claims and continuing claims fall or stay in a range. Initial claims 220, up only 1,000 from last week, and you can see the downturn for continuing claims, 1,861,000 from 1,925. So at this point, we're not seeing any surge in layoffs. We do have a problem adjusting seasonally around this time of year, but in general, the labor market looks pretty much the same way it has for quite some time. We'll see tomorrow when we get some numbers. Affecting the markets in the meantime, though, we have this great 24-hour period before we get to the jobs report that'll affect the U.S. markets. It's the Japanese markets, because Kazuo Ueda, the Japanese bank governor, said in testimony to Parliament that their policy will become even more challenging from year end and heading into next year. Well, the markets have taken that as the end of yield curve control. They do meet next week, but they're not expected to do anything then. We get a new inflation forecast at their January meeting. The Shunto wage talks, this sort of countrywide wage increase that comes into play in March, could affect the March meeting. But right now you have people in Japan betting on a rate increase for the first time in April, which is pretty much where the U.S. market is for the Fed. So we'll see if we're getting contrasting monetary policy at that time. You can see what's happened with yield curve control. The markets are basically have pushed the yield curve out of the target, and they've sort of abandoned the target, but they haven't officially abandoned the policy yet. We'll see what happens. It's obviously having a major impact in the currency markets today, and to a lesser extent in the bond markets.